The 2024 Lok Sabha elections will be on top of India Inc.'s mind in the coming months. However, there will be other factors driving corporate India too. Prime Minister Narendra Modi's address today from the ramparts of the Red Fort is an opportune moment to analyse what these could be, based on an analysis of the crucial developments that have occurred since the PM's last Independence Day address. Allegations made against the Adani Group in a report by US-based short seller Hindenburg Research comprised one such key development. The January 24th report alleged that the Adani Group had engaged in what it called a brazen stock manipulation and accounting fraud scheme. Adani responded by way of a 413-page document. Rejecting its allegations, the group described the short seller's conduct as securities fraud. Subsequently, in May, an interim report by a Supreme Court appointed panel said that prima facie, it would not be possible to conclude if there has been a regulatory failure around the allegation of price manipulation in the Adani scripts. Nonetheless, the repercussions of the report, enhanced global scrutiny, and a renewed emphasis on corporate governance could dominate India Inc.'s priorities going ahead. The mounting troubles at Byju's and at some other Indian startups have also raised questions about a governance deficit in this ecosystem too. Along with the prolonged funding winter, the startup sector is facing a trust deficit, with a chasm emerging between investors and founders.
Hindenburg has said a lot about Adani, etc. But somewhere in their report, they've also said it kind of speaks to the governance practices in India. And that's something which we have taken strong exception to. The governance practices of Indian firms have improved over the last decade, and more significantly so since the New Companies Act has come into force. Boards are much more aware of what their responsibilities are. They're kind of asking the right questions. There is one area which kind of still stands out, which needs a lot of intervention and work, and that is these startups. So you look at those which have listed and even those which are not listed, but you read about what is happening there. It is an area of concern. I have a view that this is so because the investors and primarily the private equity investors have given them a long rope. In the aggregate, governance has improved, but the old that it's not a destination, but it's a journey holds. Our market practices will change, the investors' expectations will change, and therefore companies will continue to increase disclosure levels, improve and make it more meaningful, and ask companies the right questions. And the companies will be mindful of the fact that, look, other than the promoters, there are others in the room whose interests they're supposed to balance with that of the company's own interests.
There are other concerns that will also be on India Inc.'s mind beyond governance.
There are a couple of themes which have been playing out over the last few years, and I expect they will continue to play out. If you would have spoken to the boards, they would have said, okay, let's focus on digitizing our business. That conversation, I don't think we can kind of turn around and say that, okay, that was yesterday's conversation and therefore we don't have to focus on it. Boards will have to continue to focus on it. To that, you have to now add some of the changes which are taking place on account of technology itself. Generative AI is something which kind of is top of everyone's mind. They want to know what is happening. What is it that they as companies can do will disrupt their business? Does it mean a little bit of the same? So boards have to kind of grapple with that.
On the topic of technology adoption, while artificial intelligence is not a new thing for either the Indian IT services sector or India Inc., the launch of OpenAI's chatbot, ChatGPT, in November of 2022 has brought discussions about the benefits and pitfalls of the latest variant called generative AI to the fore. As companies scramble to understand how Gen AI could fit into their business, India's $245 billion IT services industry, in particular, will be wrestling with complex questions as it looks to ride the next big disruption.
And you asked that pertinent question, the readiness of the industry. I think there's one critical factor that a lot of enterprises today are looking at four factors, which kind of are apprehensions. And factor number one is copyright issues in generative AI. Factor number two is data privacy. Factor number three is whether the quality of code that the system generates is good quality. And factor four is whether all of this is secure enough and hope company confidential data is not moving out.
The debate over AI's impact isn't the only uncertainty. After making significant investments between 2002 and 2008, India Inc. went into hibernation due to the 2008 global financial crisis and the slowdown in economic growth in 2012-13. In a bid to reverse the situation, the central government prioritized public capital expenditure. Its 2023-24 budgeted 10 trillion rupee capex is thrice that of 2019-20's expenditure. Still, as a recent report pointed out, the private sector's share in gross fixed capital formation in 2021-22 stood at 36%, compared to over 40% in 2015-16. Amid the return of industrial policy, the focus on production-linked incentive schemes, and the 2019 corporate tax cut, it may appear that the time is ripe for the private capex cycle to kick off again. But will India Inc. loosen its purse strings in an election year?
India Inc. would say, you assure us a very high growth rate of GDP, we will be more than willing to invest. And the government seems to be saying, if only you invest more, the growth rate will go up. So, it is going back and forth. We are not in that momentum of very high growth rate. If there isn't a substantial change in the policy framework, then it is more on the pessimistic side, and it is indeed a grim picture. But is that grim picture inevitable? Not at all. There are things like making ease of entering business, doing something about the real estate sector. What we need is more policies, enabling policies, liberalizing policies. If there is no major policy change, then India Inc. will not be forthcoming to invest a lot more. But if there is a major policy change, then they will be forthcoming. And in what the government needs to change, it also needs to look at not just investment, but savings as well. Look at savings, look at growth, and also look at investment, instead of focusing just on why investments are not forthcoming.
On private capex, India Inc. will most likely go slow, since major policy changes could prove difficult because of the coming general elections. On generative AI, the coming 12 months will see India Inc. figuring out how to deploy this relatively new technology, even as Indian IT gets a better handle on the second-order effects of enabling its adoption. On the governance front, India Inc. will continue to strengthen practices, with experts warning that there will still be some chance of a lapse or breach slipping past the auditors.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
He's moving from employee to employer. Business Standard.